Welcome to Explain the Charts, where we break down the market news and chart data to help you make informed trading decisions. Today, September 15th, 2024, we're focusing on the USDJPY, a currency pair that has been making headlines recently. Recent news regarding the Federal Reserve's potential interest rate cuts has fueled a strong bearish trend in USDJPY, pushing the pair to its lowest levels in months. This has caused a stir among traders, with many trying to gauge if this decline is just a temporary dip or a sign of a broader reversal. To get a better understanding of the current market sentiment and the potential future trajectory of USDJPY, we'll be examining the latest news and the chart data from multiple timeframes. Let's start by looking at the daily chart, which provides a broader perspective of the USDJPY's recent movements. The chart clearly shows the bearish trend that has been unfolding over the past few months, with the price consistently declining from its peak. We can see a series of lower highs and lower lows, indicating a downward pressure on the pair. The recent decline has taken USDJPY below several key support levels, which could signal further weakness. However, it's important to remember that the market is constantly evolving, and any news or event can trigger a reversal. The current price action suggests a strong bearish sentiment, but it's not conclusive. To get a clearer picture of the short-term outlook, we need to analyze the chart data from shorter timeframes. Let's switch to the 1-hour chart and zoom in on the recent price action. The 1-hour chart paints a more detailed picture of the recent decline, showing a sharp drop in price that pushed USDJPY to its lowest levels in months. We can see a series of red candlesticks, indicating consistent selling pressure. This selling pressure has been so strong that USDJPY has broken below several support levels, which could signal further downside potential. However, we also need to consider the potential for a short-term rebound. The recent decline has been so rapid that it's possible the market may be due for a pullback. If we see a series of green candlesticks, it could be a sign that the selling pressure is easing and the market is ready for a temporary rebound. However, it's important to remember that this could just be a short-term correction, and the overall bearish trend could continue. Now, let's examine the 15-minute chart and zoom in on a specific range of candles to gain deeper insights. This time frame can help us identify short-term price patterns and potential trading opportunities. Focusing on the past few days, we can see a lot of volatility in the 15-minute time frame. This volatility can be attributed to the constant flow of news and events that are impacting the market. We can see a mix of green and red candlesticks, indicating a tug-of-war between buyers and sellers. However, we can also see some clear price patterns emerging within this volatility, such as a series of higher highs and higher lows, which could signal a potential reversal. But we should not jump to conclusions based on short-term price patterns. It's crucial to consider the bigger picture and the overall market sentiment. Now, let's look back at the daily chart and see if there are any correlations between the news and events and the price action we've seen. The news regarding the Federal Reserve's potential interest rate cuts has undoubtedly played a major role in the recent USDJPY decline. Investors are anticipating that a rate cut by the Fed could potentially weaken the US dollar, which would make the Japanese yen more attractive. This shift in sentiment has led to a surge in demand for the Japanese yen, pushing USDJPY lower. However, it's important to remember that this is just one factor influencing the market. Other factors, such as global economic conditions, political events, and market sentiment, also play a significant role in driving the price action. To recap, we've analyzed the USDJPY across multiple timeframes and discussed the latest market developments. The daily chart shows a strong bearish trend, but the 1-hour chart reveals a recent rapid decline, suggesting potential for a short-term rebound. The 15-minute chart highlights the volatility in the market, but also shows potential for a reversal. The recent decline in USDJPY can be attributed to the anticipation of Fed interest rate cuts, but other factors also play a role. Now, let's discuss some key price levels to watch and unbiased predictions for the future trajectory of USDJPY. Based on the current chart data, a key support level to watch is around 140.00. If USDJPY breaks below this level, it could signal further downside potential. On the other hand, If USDJPY manages to rebound and close above the 142.00 level, it could indicate a potential reversal. However, it's important to note that these are just predictions, and the market can move in unpredictable ways. Several factors can influence the market's direction, including the Fed's policy decisions, global economic conditions, and market sentiment. It's crucial to monitor these factors closely and adjust your trading strategy accordingly. For short-term traders, the 1-hour chart provides a better time frame for identifying potential trading opportunities. Look for price patterns and candlestick formations that signal a potential rebound or a continuation of the bearish trend. For long-term traders, it's essential to stay informed about the Fed's policy decisions and any potential changes to their interest rate outlook. If the Fed signals that they are indeed planning to cut interest rates, it could continue to put downward pressure on USDJPY. However, if the Fed signals a less dovish stance, or if global economic conditions improve, it could trigger a reversal in the bearish trend. Ultimately, it's crucial to develop a well-defined trading strategy based on your risk tolerance, trading goals, and a comprehensive understanding of the market.